So hi girls, hello and welcome back to your next topic, that is cost of debt issued at par. Now what is this cost of debt issued at par? Debt issued at par means it is the debt is issued at the face value. Okay, it is basically the debt which is issued at the face value of the debt. Okay, now it may be calculated with the help of using the following formula. Okay, you can do it with the help of using this particular formula. Now what is this formula? It is KDA is equal to, open the brackets, 1 minus T, close the brackets, into capital R. Okay, where KD is the cost of debt capital, T is the tax rate, and R is the debenture interest rate. Okay, so this is the formula which you will be using in order to find out the solution for this particular problem under this topic, cost of debt which is issued at par. Now let's look into the first illustration. Illustration 14. A company issues rupees 50,000. A company is issuing rupees 50,000 8% debentures at par. Tax rate is 50%. What is the cost of debt? Okay, it is asking what is the cost of debt. The company is issuing 50,000 8% debentures at par. The difference here, how will you find out whether you have to calculate based on whether debt is issued, whether cost of debt is issued at par or not? You will be given mention clearly saying that it is issued at par. Okay, so substitute this in the particular formula. KDA is obviously not given to you. KD is nothing but cost of debt capital is not given to you, whereas the tax rate is given to you. That is, tax rate is 50%. R, that is rate, which is debenture interest rate, is 8%. 8 divided by 100. You have to substitute it. That is, 8 divided by 100 will give you 0.08. Okay, 8 divided by 100 will give you 0.08. Now the face value. Okay, now. Okay, before substituting, you should also take the tax rate, that is 50%. 50 divided by 100, that will give you 0.50. Okay, now what is the formula? It is 1 minus T. 1 minus, what is the tax rate? 50%. 50 divided by 100 is 0.50. 1 minus 0.50 into what is the debenture? That is 0.08. That is 8 divided by 100. Okay, substitute this into the particular formula. You will get 0.04, or it will be 4%. 0.04 into 100 will give you 4%. Okay, now let's move on to the next topic, that is debt issued at premium or discount. Debt issued at premium or discount. What is debt issued at premium or discount? Is when the debentures are issued more than the face value. Okay, when debentures are issued more than the face value, it is called as premium. Very important, it can be asked for 2 marks. When debentures are issued more than the face value, it is called as premium. And when debentures are issued less than the, when it is issued more than the face value, it is premium. When it is issued less than the face value is called as discount. Suppose the face value is equal to, face value is 100. Okay, if it is issued more than this, suppose if it is issued for rupees 110. Okay, if it is 110, then it is a premium. Okay, if it is 110, it is premium. If it is 100 minus 10, it is discount. It will be 90, it will be discount. Okay, so this is the definition of debt issued at premium or discount. Now let's look into the first problem. What is the formula of this problem? Okay, it is nothing but KD is equal to 1 divided by capital NP into, open the brackets, 1 minus T. KD, as you all know, till now we've been looking into, it is cost of debt capital. Now what is I? I is the annual interest which is payable. Annual interest. Keep in mind, it is annual interest. NP is nothing but the net proceeds, and T is the tax rate. Okay, now let's look into the solution of let's look into the first illustration as per this particular method. It says Ganga Private Limited issues 50,000 8% debentures of rupees 100 each. 50,000 8% debentures of rupees 100 each at a premium. Okay, they're issuing at a premium of 10%. Premium of 10%. The tax rate applicable to the company is 50%. Tax rate is also given, it is 50%. Compute the tax after cost of debt. Now, which is the formula you will use? You will use this particular formula because it is after debt. Okay, KD, and also you are asked to do it as for the premium. Okay, so you need to understand which formula you need to use. KD is equal to 1 divided by NP into, open the brackets, 1 minus T. Now, KD is the cost of debt capital, right? Now, the cost of debt capital, now you will have to substitute everything into the particular formula. So, I will be working out this particular solution for you all. So based on this particular formula, please write down the formula for this particular solution. Okay. Now, first find out what is the net proceed. Now, earlier also in your problems, you've seen as to how you need to find out your net proceeds. It says 50,000, 8% of 100 each. Okay, it says 50,000 of 100 each. Okay. Now, how will you find out your net proceeds? 50,000 into 100. Okay, 50,000 into 100 is... Okay, 50,000 into 100. 50,000 into 100 will give you 50 lakhs, right? 50 lakhs. Now, check if there is anything information that is of 8%. It's saying premium, right? Premium of 10%. Okay, debentures of 8% and premium of 10%. Now, what is the 50 lakhs 10%? 50 lakh 10% will give you 5 lakhs. Okay, 50 lakhs 10% will give you 5 lakhs. So, premium is always added, discount is always deducted. Okay, please keep this in mind. 50 lakhs plus 5 lakhs. Okay, how did we get 5 lakhs? It is 10% premium. Okay, 10% premium. That is nothing but 50 lakhs into 10%, which is giving you 5 lakhs. Okay, now 50 lakhs plus 5 lakh will give you 55 lakhs. So your net proceeds will be 55 lakhs. Okay, so we found out what your net proceeds. Now next you have to find out. Now see, in your solution, in your formula you found out your net proceeds, right? Now after you find out your net proceeds, you need to find out your interest rate. Now what does it say? It says 8% debenture. Okay, it says 8% debenture. Now you need to find out I. Okay, that is I in the it's capital I. I minus T, right? You need to find out your I. I is nothing but it is saying that it is 8% debenture, right? Now for your 8% debenture, it is your 50,000 shares. Okay, 50,000 shares of 100 each into 8%. Okay, 50,000 into 100 will give you 50 lakhs. Okay, 50 lakhs into 8%. Okay, 50 lakhs into 8% will give you 4 lakhs. Okay, into 8% will give you, I will be 4 lakhs. Okay, now what is T? T is already given to you. It is saying that the tax rate which is applicable is 50%. So 50 divided by 100 will give you 50 divided by 100 will give you 0.5. Okay, now substitute this into the formula. Okay, now when you are substituting this into the formula, it says I. We found out I, right? Okay, we found out I is 4 lakh. Okay, substitute this KDA is equal to 4 lakh divided by 55 lakhs divided by NP, that is 55 lakhs into 1 minus 0.50. Sorry girls, there's just one confusion in the formula. The formula is KD is equal to I divided by NP into 1 minus T. Okay, 1 minus 0.50. Now start substituting. 4 lakh divided by 55 lakhs is 0.0727. Okay, 73 into 1 minus 0.50, that is 0.5. 0.07273 into 0.5 is 0.0364. Okay, into 100 will give you, or it is 3.636. Okay, this will be your KDA. Okay, this will be your final answer. I hope you've all known how to substitute it in the formula. Okay. Now, similarly, for your next illustration also, it says Kaveri Private Limited issued 80,000 9% debentures of rupees 10 each at a discount. Here it is discount, it is nothing but you are deducting. Where will you deduct? While you are calculating net proceed, okay? Earlier when you were calculating your net proceed, you added 5 lakhs, right? Here you just have to take 80,000 into the number of shares, 80,000 into 10, okay? 80,000 into 10 is 8 lakhs. 8 lakhs into what is the percentage of thing? 10%. 8 lakhs in minus 80,000. 8 lakhs minus 80,000 will give you 7,20,000. Okay, this is how you need to do it. 8 lakh minus 80 will give you 7,20,000. Only this is the only discount while you're calculating your net proceed. Now, Kaveri Private Limited issues 80,000 9% debentures of rupees 10 each at a discount of 10%. The tax rate applicable to the company is 40%. 40% tax rate, 40 divided by 100 will give you 0.40. Okay, compute the cost of debt. Now KD is not given to you. I is I is your interest. I is always I is you are calculating, that is 80,000 into 10. 80,000 into 10. Okay, 80,000 into 10 will give you 8 lakh. 8 lakh into 9%. 8 lakh into 9% will give you 72,000. 72,000 is your I. Now, next is your tax rate. Tax rate is 40. 40 divided by 100. Okay, 0.4. Now, next, now how will you calculate your net proceeds? Now, calculation of your net proceeds. I will just show the working also for you all so that you don't get confused. See, looking at the following information, we've already found out what the interest is. Interest is 80,000 into 10. 80,000 into 10 is 8 lakhs into 9%, 72,000. 8 lakh into 9%, that is 72,000. We found out your I. That is your annual interest which is payable. Next is your tax rate. Okay, next is your tax rate which is 40%. 40 divided by 100. Okay, 40 divided by 100 is 0.4. Okay, now next is your net proceeds. How will you find out your net proceeds? It says 80,000 at 10 80,000 into 10 each at discount of 10%. 80,000 into 10 is 8 lakhs. Okay, 8 lakhs. Okay, 80,000 into 10 is 8 lakhs. Okay, now on this 8 lakhs you will calculate a discount of 10%. Into 10% is 80,000. As it is discount, it is 8 lakhs minus 80,000. It is 7,20,000. It is 7,20,000. Net proceed is 7,20,000. Now substitute this, after finding out, substitute all of this into the formula. KDA is equal to I divided by NP into 1 minus T. Okay, your I we found out, it was earlier, it was 72,000. 72,000 divided by 7,20,000 into 1 minus 0.40. Okay, now 72,000 divided by 7,20,000 will give you 0.1. 1 minus 0.40 will give you 0.6 into 0.6. 0.1 into 0.6 will give you 0.06 into 100 will give you 6%, or 0.06 into 100 will give you 6%. That will be your KDA. Okay, this is how you find out your answer for your discounted problem. Now let's move on to your next solution. Next illustration, which is Macro Land Limited issues 20,000 8% debentures, rupees 10 each at a premium of 10%. The cost of flotation, this is a different problem. The cost of flotation are 2%. The tax rate applicable is 50%. The compute after tax cost of debt capital. Okay, it is telling compute after tax debt of capital. Now in this you need to, it remains the same. Again, in your cost of flotation is 2%, right? Here your flotation cost will be added while you're calculating your net proceed. Okay, just like premium, your flotation cost is also added. Okay, now take down the formula. KD is equal to I divided by NP into, this is illustration 17, into 1 minus T. Okay, so KD is not given, I is there. Okay, your I is nothing but 20,000 debentures at 10 each, right? 20,000 into 10 into 10, that is 2 lakhs. Okay, 2 lakh. Now what is the percentage of debenture? It is 8%. 2 lakh into 8%. Into 8%, that is 16,000. So interest is 16,000. Okay, next is your tax rate. Tax, it says 50%. 50%, that is 50 divided by 100. 50 divided by 100 is 0.5. Now calculate your net proceeds. It says 20,000 at 10 each. Okay, 20,000 into 10, that is 2 lakhs. 20,000 at 10 each at a premium of 10%. At a premium of 10%, 22 lakhs. Okay, that is, how did we get 2 lakhs? Net proceeds is 20,000 into 10 each, that is 2 lakhs. Now premium, that is 2 lakh into 10%. 2 lakh into 10%, that is 20,000. Now your net proceeds is 2 lakh plus 20,000. 2 lakh plus 20,000, that is 2,20,000. Okay, sorry, earlier I told you all the cost of flotation is added, but the cost of flotation is always deducted. Okay, now on this 2,20,000, after you've got this 2,20,000, you will calculate your cost of flotation. Okay, flotation. Okay, now when you're calculating your cost of flotation, it is 2%, right? Now please see as to how you calculate your cost of flotation. Now earlier you saw, now how will you calculate your cost of flotation? Now this is still the continuation of how you're calculating your net proceeds. Okay, now as of now, before you calculating your cost of flotation, you found out the net proceeds is 2,20,000, right? Now after cost of flotation, how will you calculate? It said 20,000. Okay, 20,000. Now 20,000 into 2%. 20,000 it is issuing. Now what is the issued share? It is 20,000. 20,000 into 2%. 20,000 into 2% will give you 400. Okay. Now 20,000 into 10 each at a premium. 20,000 into 10 is 2 lakhs. Correct? 2 lakhs. Now on this 2 lakhs, you will again calculate 2%. 2 lakh into 2%. Okay. Into 2%. That will give you 4,000. 4,000 plus 400 will give you 4,400. This will be your cost of flotation. Okay, this will be your cost of flotation. That will be 4,400. Now again, how you have to calculate your net proceeds? That is 2 lakh into 20,000. That is 20,000 into 10 will give you 2 lakhs. Plus your plus the amount of premium, that is 20,000, that is 2 lakh into 10%, that is 20,000 minus 4,400. 2 lakh plus 20,000 minus 4,400 will give you 2,15,600. This will be your net proceeds. Now you will substitute this in the formula. That is I we found out earlier was 16,000. 16,000 divided by 2,15600 into 1 minus t, tax is 0.5. Okay, 16,000 divided by 2,15600 will give you 0.07421 into 1 minus 0.5 will give you 0.5. Now 0.07421 into 0.5 will give you 0. Now we are finding KDA 0.037105, or into 100 will give you 3.7105. Okay, this is your final answer. Now you all understood how you need to do it when it is cost of flotation also. Sorry, earlier I told you all it is added, but cost of flotation is something that needs to be deducted. Okay, it is a loss to the company. So cost of flotation, always keep in mind, it is similar to how you are calculating discount. Okay, when it is premium you need to add it, while it is discount or cost of flotation it is cost. Cost means it is deduction. Okay, so you need to deduct it. So with this we come to an end of the thing. Now you have just one last illustration, that is one last illustration under that particular topic. It says ABC Limited issues 12% debentures at 6 lakh rupees 6 lakh. The tax rate applicable is 50%. Sorry, compute the cost of debt at par, at 10% premium and at 10% discount. Work out this particular problem. See for yourself if you're able to do it. Now at par, we've already done the problems, right? At par, how it is issued at par, the formula was, when it is at par, it is KDA is equal to 1 minus T into R. While at premium, it is nothing but you are adding it using this particular formula. While at discount, you are just deducting it while you're calculating your net proceeds. Okay.